Thank you very much. First of all, I'm the Director General of BEUC, the European Consumer Organization, and I speak more in that capacity as that of a member. And I would just like, and I have, as a consumer representative, I have this privilege of working in many sectors. And when you say it will happen again, I just have to share with you, you remember the scandal of the mad cow disease. And there it has been decided that there would never be any animal protein fed to animals. And now, in June, there is a reintroduction of animal proteins for fish, and they are considering to reintroduce animal proteins for pork and poultry. So it will happen again. It will happen again, and that such is the human nature. Huh? Now, as I said, I'm the consumer representative, and I have had the honor to participate in the Liikanen group, and certainly not, I must admit, as a financial expert. Because I'm not a financial expert, and the first 2 weeks I was, in crash course mode, trying to understand all those terms, like deleveraging and all that. I didn't understand, and then I said to my colleagues, the real experts, I said, okay, I can help you understand your energy contract. I can tell you whether the food that you eat is safe. I can tell you how you see whether a toy that you give to your children or grandchildren is safe. But don't ask me to define proprietary trading. It's not my role. And my role is it to be, let's say, provide you with the common sense of a consumer expectation in this group. I have to admit, it was one of the most inspiring and exciting moments of my professional life to be part of this group, because it was quite lively discussions and very, very interesting meetings with the different sectors concerned, with the clients of the banks and with the regulators. Now, this being said, before I speak about the Liikanen report and separation or not, you can understand what I'm advocating. I would just like to tell you that our priority number one as consumer representatives for the moment is resolution, bank resolution. Because this has really been high on the agenda, certainly with the Cyprus crisis, but also with what Mr. Rehn has said yesterday. It was quoted this morning in the press about unsecured depositors. And in fact, the financial sector is a unique sector where the clients of a company that is going to be bankrupt are potentially or really, and apologies for my provocative word, ripped off in order to save. If you transpose this in a little creative manner, you are a client of a telecom company. Would you accept to give away your smartphone in order for that company to be saved? Because as a client, you deposit the money, it's your money. You are not taking any risk. And you have been told, my parents told me, put the money on the bank account because there it is safe. And it's the whole system that is being rocked because the policymakers, they are speaking about unsecured deposits just as if it was totally normal that people who are going to be stolen of their property just because somebody has mismanaged risk. They are the only ones that have not been able to influence the risk-taking. And so this is something which is really a lot of very bad signals. I just read, before coming here, that almost 60% of German consumers do not believe anymore in the deposit guarantee system. Now we need trust. We said it before. We need consumer trust. We need depositor trust. Because if that is the type of message that Eurogroup is going to go on telling people, they are going to get the money out of Europe. And Europe needs deposits in order to be able to invest. So this is the totally wrong approach because, okay, you can speak technical, but when you saw at the Cyprus crisis what has been said in the newspapers about, you cannot expect as a consumer to have a safe guarantee system if the state is going to be bankrupt. This is totally against common sense. And this should certainly be thought over twice. And I would also like to stress that even if the deposits can be secured for 100,000 euro, this doesn't mean that it's only rich consumers. Because it can be that you are a junior pensioner and you just received your pension capital a few days before the bank was going bankrupt. So it's your whole pension that you have saved for that is gone. Or you just sold your house or your apartment. You have the money on your account and you are going to buy the new one. Lost. So this is really something, and it's not only rich consumers that are house owners. in some countries there is a very, very reduced rental market, and you have to buy a house in order to be able to live somewhere. So if you want to restore consumer trust and to restore consumer confidence and to prevent a bank run, because that was also one of the major risks in the Cyprus crisis, better get the signal right, but beyond the signal, deliver a safe banking system. And of course, coming back to structural separation, this is one of the tools that can be used in order to provide consumers and taxpayers with a safer banking system. And in fact, of course, the banking system has grown over the years or the decades too complex and too opaque. And there has been this deregulation trend. And in fact, in the deregulation trend, what do you say? You say the market will regulate and competition will be healthy, and that will be the way the financial sector will behave properly. But of course not. You have had the too big to fail. First of all, the too big to manage syndrome, and then the too big to fail syndrome, where in fact those banks that benefited from the implicit state guarantee were able to take larger risks and then could engage into unfair competition towards those banks that could not benefit from this implicit guarantee. So this is certainly unhealthy, and banks must be safe and they must be simple. So for us, as consumer representatives, we certainly welcome the Liikanen report. We would even go further than Liikanen, but that, of course, I could not ask for in the group. And what has not been said in this room, in fact, is that the deposit-taking bank is the one that won't take the risks, or very, very limited risk. While the risk-taking bank, they can take the risk, no problem with taking risk, but they will be the ones who have also then to bear the risk. And they can fail, because that's the consequence of the separation, is that they will, the deposit-taking bank is the bank that should be saved, but as it will not engage into risky activities, there is no bailout needed. While the risk-taking activity of the bank, it's the problem of those who take the risk, not of the clients. And this is something which is maybe not very explicit in the Liikanen report, but that's the reasoning behind it. And then what I also would like to stress, the previous speaker just had made a reference to that, there are 5 sets of recommendations in the Liikanen report. Only 2 are about separation. And you already spoke about governance and about risk governance, and about also the fact that remuneration and incentive schemes should be also much more linked to the risk taken in a negative way. I mean, like bail-in and deferred remuneration and clawback. But there was also a recommendation about the risks being taken by banks in mortgage lending, in property lending. And there is one element is higher capital requirements, but there is another one which is key, which is more responsible lending, because with the loan-to-income and loan-to-value ratio. This is something that has been overlooked, and that's one of the reasons why there has been the Spanish mortgage crisis. So if we have this into the system, and where banks have and don't play casino with the houses, and this is also one of the reasons of the United States crisis, is that people have been granted mortgages while it was sure that they would not be able to reimburse them, just gambling on the fact that those houses would be have more value in a few years' time. So this is certainly one of the recommendations that I would invite the Commission to take on in the proposal. And the last one, which is part of the 5th one, which has not yet been touched upon, is sanctions. What we see currently in the system is that those who are the people who are being sanctioned, who are in jail, who are losing money, it's the victims. While the managers, the top managers who have taken risk, who have taken quite a lot of income and wealth because of the risk they have taken, they are in fact protected. And there in the sanctioning system, there should be certainly much more top managers either in jail or certainly out of business for the rest of their life. Thank you.